You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 15th of October, 2018. Book is available for sale. I am back in the country. Thank all of you for dealing with me yesterday on the podcast. I was a bit delirious. I think all told, traveling back from Europe, I was on the road in the air somehow about 22 hours. So I was right at the end of it yesterday. One more flight between airports, had to get it out, and I did get it out. So thank you for putting up with me. We only missed one day during all that time, and thanks so much. Been exciting. I would love to have been here for this market because, again, it has just been really going, like I kept telling all of you guys, and I say every year, let's get through the summer doldrums. Let's get through the summer trading zone, which really stinks, and into the fall-winter trading zone and see things happen. And we have been seeing that. Okay, what do we have happen at the end of the week? What's the big thing? We had the weekly vertical crossover going down on the S&P 500. Now, it was up for the day, 1.41%, but we have a weekly vertical crossover now in effect. Those of you signed up for our text notification, you will, of course, be receiving that in your box today on your phones. You will see weekly vertical crossover going down. Check the markets at 10:30 or the beginning of the afternoon 4-hour candle to see if the market is moving in a down direction on the S&P 500. We see what we like to see. We see the derivative oscillator gaining downward momentum's crossed over into the red on a down move, and the price percent oscillators crossed through the red signal line. We have a big red down candle. So we go from the weekly to the 2-day. What do we see there? Well, again, first day of this latest 2-day candle, down candle. That's showing us again with our Heikin Ashi candlesticks. They're measured differently than the regular candlestick, and they are showing us that the average pace is which is what Heikin Ashi means in Japanese. The average pace is down. Derivative oscillator gaining downward momentum. Price percent oscillator gaining downward momentum. We go to the 4-hour chart. What do we see there? See some down movement and up movement in the morning, down movement in the afternoon. Now again, it was up technically for the day, and that means a lot, up 1.41%. But we're seeing the derivative oscillator lose some energy, price percent oscillator still heading down. So let's just watch. The market could pull back a little bit after some huge drops, and we will see if indeed it pulls back or it gives us an opening on Monday. If it doesn't, then it will present an opportunity like the Qs did to us in a week or so, potentially, for a jumping in point. But we've done very well by these weekly vertical crossovers. Again, we're not a stock calling service. We're an education firm. We want you to practice with us. And then once you get good, read other books, take other classes, do all you need to do. It may take years, but when you get good, you can make up your own mind and do whatever you want to with your own money. You can go to Vegas and gamble it away. Hopefully, you'll make the right decisions. Okay, the Qs. What do we see going on there? NASDAQ 100. Remember, we had a weekly vertical crossover way back on the week ending Friday, the 21st of September. Well, it went up the next week. And then we had a red spinning top the following week. And we continued to see that weekly vertical crossover in effect because it popped over. Derivative oscillator went negative the week ending the 28th. The price percent oscillator really hiked down that next week ending the 5th. And of course, we've had another down, a big down week as far as price goes on our Heikin Ashi candlesticks and everything tracking down. Now again, Q's up for the day, 2.79%. A little herky-jerky action there. That's all right. We anticipate things to happen when markets are really volatile. We look at our 2-day chart. We see, of course, lots of down candle price movements below the 2-day trend line. Derivative oscillator gaining downward momentum. Price percent oscillator headed down, not at the same strong angle it had been before. This is just the first day of the latest 2-day candle. It will complete on Monday. Look at the 4-hour chart. What do we see? Up in the morning and then some pullback in the afternoon as far as the average pace goes on our Heikin Ashi candlestick. Didn't go back to solid red, but again, slowed up. We see the derivative oscillator losing momentum. And again, remember, we had our jumping in point way back on the afternoon of the 4th. Lots of great down movement. It's pulled back a little bit. And again, if you want to pull the plug, take your profit, you can do that anytime. We had a pullback that happened with actually 2 green candles back on the 9th. It could be pulling back for good right now, could just be digesting. So watch. If you start seeing things happen like your 2-day trend line being blown through, if you start seeing the derivative oscillator switch over to negative, and in particular the price percent oscillator, well, that'll tell you that move's probably gone. But you can pull your profit, your virtual profit, anytime you want. The trick is to be in the profit margin and then not to lose it. Let's go to 20-year bonds. Well, they continued their down move, 0.34% on Friday. We had a weekly vertical crossover way back on the 14th of September and continued strong down movement, including this week. Derivative oscillator gaining momentum. Price percent oscillator still heading down, not at the same strong angle it had been the prior week. That 2-day chart, however, what do we see there? Well, it's pulling back again, pushing through the 2-day trend line, still positive as far as the derivative oscillator and price percent oscillator goes. They've not crossed over going up. When I say positive, still positive for the move, which is a negative move. Okay, that's confusing. Derivative oscillator still negative, price percent oscillator flat. That sounds better, makes a lot more sense. Now let's go to the 4-hour chart. What's it doing? Well, we told you it pushed through, started pulling back, bottoming out, and then of course it pushed through and crossed over, going up. And we saw that it ended over the course of the afternoon on Friday, pushing through the 2-day trend line. You got a lot of bells and whistles there to have pulled this back when either it bottomed out and started moving up, which you can do anytime, or particularly when that 4-hour chart crossed over, and even more so with the derivative oscillator being green and the price on the Heikin-Ashi candlestick pushing through that 2-day trend line. All those bells and whistles have gone off, which would be telling you, hey, wait and see if it does again allow you a down move after it pulls back a little bit. Then you can sort of money press it. You can let it go down on an inverse trade, and you can bleed off some virtual profits there. Pull back, let it go up, and then if it crosses over going down again, make more money. Remember, when the weekly and the 2-day are in confirmed moves, you can have pullbacks on the 4-hour, and when it rolls back over in the right direction, either up or down, that's when you can get back in for an up play or an inverse play. Lastly, we go to gold. Now, gold crossed over on the weekly chart, not strongly at all, back on last Friday, the 5th of October. It then continued to accelerate up as far as the derivative oscillator price percent oscillator goes into the week with a green spinning top. Again, looking okay. 2-day chart, what do we see? Looking quite nice as far as the latest. Now, again, it was a bit of a pullback on Friday, but we're seeing with the Heikin-Ashi candlesticks, average pace is still going up. Derivative oscillator gaining momentum, price percent oscillator heading up. Then we go to the 4-hour chart. What do we see there? Well, really blew it out in the morning and afternoon on the 11th, giving us that jumping in point, pulled back a little bit. So keep your powder dry. Be careful when gold makes those kind of super strong moves. Some people are going to take profits. So again, play that accordingly. Want you to experiment and practice. Remember, these are virtual trades and you are learning. Learn, 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 learn. And we want to see where gold does. We're sure hopeful that gold is going to continue going up. What we have with these red open box candlesticks is, again, pullbacks, but not strong down movement like we saw in the morning on the 8th with a big red down candlestick. So keep your eye on things. Let's, again, try to keep a little profit if we can, but you can't have everything always work. Don't get yourself bent out of shape when you follow the rules. And if things don't work, the trick is to pull the plug in a timely manner. There's plenty of time to make virtual profits, and you will make them. But again, it's controlling those losses when the market presents you with a challenge. And again, 4-hour chart, derivative oscillator still gaining momentum, price percent oscillator still heading up. So don't get too worried about things. We'll see where gold is going, and all these other things are over the course of this next week. Thanks so much for being with us. You want to support us? Buy the book. It is for sale. We sure appreciate you. God bless. All the best. It's back to be in the country. It's great to be back in the country. All the best from the whole team here at Charting Wealth World Headquarters.